Hello everyone, hope you are all keeping well. So today what I'm going to do is a video that a few people have been asking me to do. So a few students have been getting hold of me to sort of chat about this, and basically everyone I really talk to asks me this question in terms of trading and investing. So the question is, how much do I need to start trading? Now, just to give you a bit of a background, this can be a bit of a complex question to answer because there are so many different variables involved in this question. As an example, what type of assets do you want to trade? What are the time frames you want to trade it on? How much do you want to trade? And here's the problem, is there is a great deal to this answer. But what I'm going to try and do in this video is slim it down really nicely into 3 different phases of how much money you need to start trading. So what I'm going to do is speak to you about starting out right in the beginning, what you need to start trading and why you need it. I'm going to talk to you about intermediate, so having a few years of trading experience, and then more advanced, how much you need to become more advanced at trading and how many years you should expect it. Something that you need to also understand about this video is this is my personal opinion. Yes, I have been trading for a few years and I do have quite a good understanding of what people need to trade and invest with. But what I also need to say is that you need to accept this as my personal opinion. Nothing is truly perfect and correct, and this is not a set standard that I'm going to tell you should be following. There are other people that have come up with good options and good structures to how you should start trading. But once again, some of these structures can either be more risky or more difficult to apply. I'm going to take a more conservative and professional approach to this, which I really do feel, in my opinion, is the best approach you can have. So another thing is I'm going to be focusing majority of this talk on trading derivatives, on trading indices, on trading currencies, and also trading commodities. I'm not going to focus too much on trading things like stocks or trading any specific types of assets that might have very specific types of leverage, account types, all those sorts of things. I'm going to start out with the basics of, as an example, Forex, commodities, and indices, and then what we'll do is build our way up from there. So what I do need to say is this is going to be a difficult start to the video for some people who are eager about how to trade and invest. Don't jump off this video just because it's not the answer you're looking for. Please, can you take the time to get to this end of this video, because it is very important that you go through all of these 3 phases. So phase number 1 is going to be as a beginner. So as a beginner, I consider it to be 0 years experience live trading all the way up to 2 years experience. I'm not going to say that demo account trading doesn't count, but in a sense, in terms of live trading, yes, it doesn't count. So this is 0 years to 2 years experience of live trading. If you've been studying for a couple months or a year or 2, that is not considered experience. How long have you been on the live accounts for? So basically, on a live account, what I say is the minimum you need to start trading is about $1,500. The reason why I use $1,500 is because based on proper risk management, the different strategies you can apply and you can use, and the fact that you should have enough space to make mistakes and not blow your entire account, I feel $1,500 is enough. It might not be more than enough, but I feel it's the least amount you should start off with. There are many things of people saying you should have $200 or $500 and you can make money and you can double it. This is all absolute rubbish. It is impossible to do that, and I assure you it is not a healthy approach to trading or investing in either respects. You need to focus now on the $1,500 as a minimum investment. Now, what I do say for the 0 to 2 years of live trading, stick to $1,500 going up to $5,000, and try not to go above that, because in the first 2 years of experience, you're probably going to go through big mistakes or big drawdowns, or maybe you get something wrong. And what this is going to mean is if you got more than $5,000 and something goes really wrong, you're going to be losing a massive amount of money. Keeping it limited to $5,000 means that you're also limiting your maximum drawdown and your maximum loss. You don't want to go and deposit $10,000 or $15,000 or $20,000 into your account and then lose it all, because that's a massive loss. So limiting the account for the first 2 years to something small is also a lot better, but making sure it's above $1,500 will make it a lot easier for you to trade. Now, what you also need to realize is for the first 2 years, you need to learn how to trade. It's not about making money, it's about actually learning how to make money. And this is the problem. People will go and deposit money into an account, they'll be super eager to try and make lots of money, make $1,000 a month because of all this rubbish advertising that's out there, that all of these educators out there are pushing you to bite onto. So they say to you, yes, you can make $1,000 a month. Come and study with me and I'll make you rich. That is absolute rubbish. For the first 2 years, you need to focus on your studies. You need to focus on making sure you actually understand how you're making money, that you can make it consistently. So don't expect that for the first 2 years, you're going to be making a massive amount of just $1,500 or even $5,000. You need to focus on creating a very, very low leverage profile, creating a much more consistent approach, creating a conservative investment strategy that you either teach yourself or you get someone else to teach you. But you need to make sure that you're focusing on creating slow and consistent returns over those first 2 years. So don't expect that you're going to make a massive amount of money. For the first year or two, you can make maybe a few $100, maybe $1,000 or $2,000 if you do really well. But don't expect that you're going to make a massive amount of money for those 2 years because you need to focus on your studies. Now, for the more intermediate experience, this is above a beginner, but really not going to super experienced. I usually call this 2 to 5 years experience, where you can manage anything between $10,000 up to $50,000. Now, for this, you are going to be able to make a little bit more consistent returns. As an example, maybe you can make up to $10,000 in your first year, maybe $20,000 if you're doing well. But don't expect you're going to flip the account or double the account or be able to go buy a brand new car, become rich. This is still the first 2 to 5 years a learning experience for you. This is where you become a lot better at being able to create a solid track record, being able to understand the consistency of your approach, being able to develop the full understanding of what conserving your capital really means, being able to risk less while being able to make more. That is what a more conservative approach means. You also need to understand more about portfolio diversification. Now, what I mean by portfolio diversification is what I try and push people into over the first 2 to 5 years is that they create 2 different portfolios. So they can create a more aggressive portfolio that can go for anything between 30 to 50% per year return, but then they also create a more conservative portfolio where they're going for anything between 10 to 20% a year. What this allows you to do is not only practice different strategies, different risk management processes, and create different asset class exposures on different portfolios. It also allows you to protect the downside of the capital you want to keep and also make sure that you can create higher returns on a more leveraged portfolio. Now, this is something that I consider to be more of my own approach and my personal opinion to this. Not everyone does this, but I do know of quite a few people that have been able to do this successfully. For myself, I've been trading 2 separate portfolios for about 1.5 years now, and I have been able to create amazing returns, and I'll continue to trade 2 different portfolios for many years to come because I have completely different exposures and control values over these portfolios. Now, for the more experienced trader, which is 5 to 15 years experience, or sometimes getting on to more. Over 15 years experience, I tend to call them the gurus or just call them old. But those guys also can do incredible work in the financial markets. I love getting exposed to people like that. But for your 5 to 15 years experience, this is where you can consider it to be an income opportunity. Sometimes this is the time where you either might become a professional trader, you might get yourself licensed, you might be able to go and work for an investment bank and manage other people's capital. This is where things kind of get a bit serious. But what you need to realize is 5 years is really not that long. So now you've taken 5 years of sacrifice, of study, of creating consistent returns, learning about the market, and now you can really start creaming it. So think of this as an investment. Invest 5 years up front to spend the next 25 years being able to cream it in the financial markets and really make a lot of money. But that upfront 5-year investment is crucial and the most important. If you don't invest properly in those first 5 years, you're not going to make a success for yourself. So what I usually say for the 5 to 15 year period is being able to manage anything between $150,000 all the way up to a few $1,000,000. Now, this can obviously vary based on how much money you have available or also if you're investing other clients' capital, or if you are working for an investment group or an investment bank, or even as a proprietary trader. Now, depending on your experience and what you're currently doing, that capital amount is obviously going to vary a huge amount. But that's what I can't really put in this video for you. In terms of what you should be focusing on during this period of time is obviously now you have a consistent track record. So let's say you have 5 years of consistent live trading track record. You know what you should be expecting based on the capital. So let's say, for example, you're managing about $500,000 of your own money and that you're actually doing really well. And let's say you're making about 25% per year. Now, 25% is really, really good. This is where you can make over $100,000 a year in returns, and you can take a little bit to live off of it, and you can put the rest to reinvest back into your portfolio to try and add to those compounding returns. As an example, if you're working for an investment bank, you're going to be able to do a lot more, but you still need to focus on creating that consistency, that conservative approach, being able to diversify your portfolios, being able to manage your risk incredibly well. The thing is that the process never ever changes. It never changes. Whether you're managing $1,000 or you're managing $1 million, your process never changes. You're still trading on the same platform. You're still trading the same asset classes using the same strategies. Yes, sure, your strategies might change slightly, but the fundamentals of your strategies, the principles, the core basics are going to stay exactly the same. And this is why I try and impress upon you how the first couple of years of trading are actually more important than the 5 to 15 years experience. Because here's where it comes from. Your fundamentals and your basics and your principles are where you truly become good. After that, it's just about replicating what you know works. It's about creating that strong, consistent foundation of actually creating a consistent track record and a consistent approach and a healthy approach to trading and investing. Because here's the thing. Let's say, for example, you want to go work for an investment bank, or you're going to want to go work as a proprietary trader. And let's say for the first 3 years, you've just been swinging for the fence, you've been making money, but you've really been a wild cowboy. They're going to look at this and they're going to say, we can't invest in you because you've been absolutely crazy. And what they're going to do is they're going to hit that reset button and they're going to say, we need to put you on a brand new track record. We need to give you new strategies. We need to give you a more conservative structure, because they can't invest in someone who's going absolutely crazy. You know, it's very similar to some people that I know who are invested in Bitcoin. They might be making lots of money, but when I say to them, well, can you prove to me that you know what you're doing? They can't, because all they did was they bought on the dip and they hold the position up and up and up through that absolute mania of going up into the few $1,000, 10 up to pushing $10,000 a Bitcoin. Now, that although is making money, which there's nothing wrong with that, a professional firm, a professional trader, or an investor is going to look at that track record and go, there's no substance to this record. And that is the biggest reason why creating that consistency, that conservative approach, banging away at it, at your craft all the time and consistently improving is the main reason why at that 5 to 15 year gap, you can walk into an investment bank, you can start trading for investors, you can become a proprietary trader, and you can manage millions of dollars of liquidity. But the problem is, if you don't put in that sacrifice, that investment for the first 5 years, you're never going to get there. So in conclusion, here's my top 4 tips from this video. Tip number 1 is going to be focus on studying for the first 2 to 5 years. Don't focus on making money, focus on learning how to become the best you can possibly be. The first 5 years are the principles, they're the basics, and they're the most important part of your entire trading career as a professional or even as a live-at-home investor. Point number 2, don't focus on trying to make thousands of dollars. It's impossible to try and double your account, make tons of money from a small investment, or be able to make millions of dollars after the first 2 or 3 years of trading. You need to focus on a consistent approach of something like 10% per year, 20% per year, sometimes up to 30 or 40% a year. But don't ever think you can just go into the market brand new or doing a course or watching a few YouTube videos and think you can make tons of money in the financial market. Go try it. But what you're going to do is realize that what I just said was actually correct. There is no chance that you can actually do it consistently. And I've worked with hundreds of students, And I've been able to see this so well that everyone thinks they can go and do that until the second they lose all their money and they realize that the professional was right. Point number 3, your track record means more than the money you make. How you make your money is more important than how much you make. When you land up sitting in front of an investment bank, investors, proprietary traders, if this is the approach you're going to take, they are not going to care about how much money you make. They are going to care about how you made that money. What is your strategies? What's your risk management? What's your approach? What's your drawdowns? What's your average monthly returns? What's your profitability ratios? What's your profit factor? What's your Sharpe ratios? What's your value at risk model? They're going to ask you all of these questions. They're not going to ask you how much you made. So you have to focus on making that track record your absolute best. If that track record is spotty and full of massive drawdowns, very risky decisions, they're going to tear that track record up right in front of you and tell you that you have to start from scratch again because you've been wild. Number 4, focus on compounding your returns. Now, if you know, there is a video that I did previously about 2 weeks prior to this video about the $10 million retirement, talking about compounding your returns and focusing on a long-term wealth creation, 20 to 30 years time. That is what you need to do. You know, if you're just going into the financial markets, you're making $100 a month, $200 a month, and you're constantly withdrawing it, your account is never going to grow. And that return, although it might stay at 20% a year for the rest of your life, you're still going to be making $100, $200 a month. Focusing on putting that money back in your account, compounding it, and constantly growing that account, finding new investment, maybe going to work for an investment bank if that's what you'd like to do, is the biggest way to really exponentially increase how much you make. That is the biggest step. Focus on compounding your returns. So once again, everyone, I really hope you enjoyed this video. Once again, like I said to you, it is my personal opinion. It's what I feel is the right approach. I run a trading academy. I teach people how to trade in over 25 countries around the world. And what I do is I teach them how to trade and invest like a professional. I teach them how to be conservative, how to not mess around their portfolios. I'm not the type to do things like send out signal services or give you some quick, easy to get rich strategy or follow this indicator. I teach people how to become professionals. And that's what I do. You're going to see in my videos, they are all on the professional side of this approach. So what I'd like to say is, like you know, my videos are focusing on providing you the best education you possibly can, especially over my social media pages. So if you really like this content, make sure to give it a thumbs up. Let me know what you think in the comments below, and also subscribe to the channel if you'd like to see consistent uploads, because every single week I'm uploading educational content, so a new topic every single week that's going to help you in something to do with trading or investing or wealth management that can really make an impact to your future and to your track record. Once again, everyone, thank you so much for watching, and I'll see you in the next video. Cheers for now.